Tom, it's great to see you. We've come down a lot from $120, and I'm wondering how you would describe this moment that we're in. Would you be betting for higher prices when you see headlines like these?
I'd be betting on higher prices for refined products, for gasoline and diesel, and particularly diesel
Yep.
in the second half of the year, which doesn't strike the nerves with the public the way that gasoline does, but can really have an impact on inflation and freight costs and so forth. I saw something
Mhm.
this week I haven't seen before or since December of 1989. I saw the price of diesel in the bulk markets trading at twice the price of WTI crude. And I don't think a lot of people get that. They don't understand that WTI is, yeah, $70 or so, but the price of diesel is about 138 and the price of gasoline is about 125. These are relationships that are kind of like the Billy Bob Angelina Jolie marriage. They're not the kind of relationships that are going to last a long time.
Wow.
Well, so what's the driving force behind that, Tom? Is this moved from being an issue where we were concerned about the supply of crude to actually a refined products issue, and why?
Well, I think going into the year, we had looked at it and we said there aren't going to be enough new refining capacity built to handle world growth. Every time you add a million people, you add quite a bit of petroleum demand there. Now, if you throw in the fact that more than a million barrels a day of Persian Gulf refined product supply was damaged, Venezuela is operating on fumes at the moment, and Mexico is probably running their refineries at only 45% or so. The United States is in great shape. We're the cleanest dirty shirt for all the different markets in terms of supply. But the big story, and I think the big story that's not getting covered that much, are the drone strikes in Russia. Russia has probably lost somewhere over a million barrels a day of capacity. They're running at maybe 3.3 million barrels a day, and the capacity is 5.5. And every week you see more large refineries in Russia set fire, and they're not going to be back anytime in 2026.
Fascinating. All right, Tom Kloza, let's stick with the Billy Bob theme for a moment. Is there an opportunity here to turn up the shale in the Permian? Can the landman get busy? And if you're an investor, based on everything I'm hearing, you're chasing the refiners right now?
Yeah, I don't think crude oil is the problem. We've still got
Okay.
another 5 or 6 weeks of SPR sales. So I think crude oil, if anything, it is going to resemble a little bit of a mini glut. Although we shouldn't, be confused by that. When the SPR sales end, crude oil will be tight. And July and August, probably in the next 60 days, Joe, this is the highest demand you see worldwide. So we're going to need it. But I don't think, I think the president has been really successful in talking down the crude oil markets. If you look at the innards of the market and how much speculative money is bet on higher crude oil prices now versus the run-ups over $100 in the past, there's virtually nothing there. They are afraid to be long because they're afraid of a Truth Social post or a presidential tweet. He doesn't have the same impact in gasoline and in diesel. And, it wouldn't
Yeah.
surprise me if he doesn't start posting some things that they don't have, an idea to do because of policy, but they want to put the fear of God in the buyers who are speculatively buying gasoline and diesel.
Wow.
Well, we have seen the president talk about retail gasoline prices and how he feels the prices at the pump should be lower given what we've seen in crude. He has suggested price gouging has been taking place. First, he was targeting big oil companies. Maybe someone informed him that that's not exactly who was setting the prices that consumers see. And then he ultimately, in later True Social posts, was targeting the retailers. His suggestion is that $2.50 a gallon should be more reasonable for the current environment. What would need to happen, Tom, for us to get back down to $2.50 a gallon?
Well, we'd have to see another $20 or $30 drop in crude oil, but we'd have to see refining profits, which are $50 to $60 a barrel right now, go back to that $10 or $20 barrel number. And refiners are doing a great job. They're making a lot of money, and they're making it despite the fact that they're exporting a good bit of product as well. It's not worthy to attack the retailers. I looked at the average markup for gasoline this morning before I went on the show, and it's less than 30 cents a gallon. If you consider everything that goes into selling a gallon of gasoline at the pump, 30 cents is really not all that much. It's more than it was 15 years ago, but it's not by any means price gouging or a windfall.
So if you're an investor, should you be looking at the refiners with that bottleneck that you're describing, Tom, or do you go for the pipeline
Absolutely.
companies as the Middle East and Europe try to find ways around the strait?
Absolutely, the refiners are the best place to be parking investment money right now. In about 3 weeks, they're going to start releasing earnings. And I think that they actually have an embarrassment of riches to deal with. And they're going to have to talk about the current environment in the third quarter. It is spectacular. We have never seen these kind of refined products margins on a sustained basis. Even in 2022, at the beginning of the Russian war, and back in the past, it's always been crude oil that overreacts. And right now, you can make the case that gasoline and diesel have overreacted, but I think you could also make the case that these are the products that really should have risen, and they are.
So if it's refiners that are the winners, but it's higher diesel prices that you see, Tom, who's going to be the loser in that? Where will the economy feel those effects of higher diesel prices?
The losers are anybody that uses oil, whether it be diesel or marine gas oil or whatever, to move things around the country. That's where you're going to see it. Now, we're in relatively good shape right now because we've dropped probably 80 or 90 cents on diesel. But if you look at the end of the year and you say, what's the one product that could have a paroxysm higher? It would be diesel. It would be heating oil. It would be marine gas oil. That part of the barrel, which is about 30 million barrels a day internationally, is going to be scarce without the contribution of Russian molecules. And right now, it looks like Russia is going to see lower and lower refinery runs because Ukrainian drones are going to strike them. If the president really wants to impact the oil market right now, he would, basically go 24/7 and try to get a peace deal for Ukraine and Russia. That's probably more important to the price of fuel than what happens in Iran.